So whether you're a seasoned investor or just starting to explore real estate, there's definitely one opportunity you can't afford to ignore right now. Across the US, short-term rentals are reshaping the way people travel, the way people live, and also the way they invest. So think about it. Vacation homes, Airbnb-style stays, even unique properties like cabins and tiny houses, they're not just a trend, they're becoming a serious wealth-building strategy. And today, we're breaking down why short-term rentals, or STRs as they're called, are capturing so much attention and how you can take advantage of them. So why invest in short-term rentals right now? So let's face it, short-term rentals remain one of the strongest real estate investments in 2025, especially with the return of the 100% bonus depreciation that came in with Trump's Big Beautiful Bill. What makes this moment even better is that we're seeing opportunities today that simply weren't available a few years ago. The STR sector continues to thrive, fueled by travelers looking for unique, experience-driven stays. And we also use a specific strategy to match investors' goals with the right markets, which I'll explain in just a moment. Now, what our data shows is that occupancy rates, average daily rates, and annual gross incomes are not only holding strong, but in many markets, they're actually climbing. So whether you're looking to diversify your portfolio or step into real estate investing for the first time, the fundamentals couldn't be more promising. So here's what's different now compared to just a few years back. Travelers have shifted about how they think about vacations. They want authentic experiences, they want room to spread out, and they value the flexibility that comes with staying in a home rather than a faceless hotel. And the best part is this trend isn't slowing down anytime soon. I mean, our national network, we do a lot of short-term rental business in Sonoma County. Last year we did just over $20 million worth. But we also have a national network of specialist short-term rental agents. So beyond Sonoma County, our network extends to some of the most sought-after short-term rental destinations across the entirety of the US. And what makes our approach unique is that we don't just zero in on the obvious spots. We dive into the data to uncover opportunities that truly deliver exceptional returns. And I'll show you how exactly we guide our clients through every step of that process just in a moment. Now, through a network of agents, we cover beach escapes along the Florida Panhandle, including Panama City Beach, Destin, and Port St. Joe. We also have agents in Bradenton, Saratoga, Northeast Florida with St. Augustine and Jacksonville, and Texas Gulf Coast with Galveston and Crystal Beach, plus Myrtle Beach and Hilton Head. If mountain and lake getaways are your style, we've got those covered as well. We cover places in Missouri, Asheville, Bryson City, Banner Elk in North Carolina, the Smokies in Tennessee. We cover Pennsylvania, the White Mountains in New Hampshire, Hocking Hills in Ohio, Lake Hartwell in southern South Carolina. So we cover an awful lot of the top STR markets across the entirety of the US. And then there are the urban hotspots. Right now we're seeing strong opportunities in Scottsdale and Sedona in Arizona, Nashville in Tennessee, Indianapolis in Indiana, and then along Kentucky's Bourbon Trail, like Phoenix, San Diego, Salt Lake City in Utah. So a whole range of markets. But we're not just pointing into these markets. Many of our agents we work with are also active investors themselves. So that gives them first-hand insight into the nuances, the regulations, the seasonal shifts, and most importantly, the real numbers you can expect to achieve. So let's get into the numbers, because at the end of the day, that's what really matters when you're making an investment decision. And I'm sharing real figures from recent AirDNA and industry data for several top US vacation rental markets. So starting with Panama City Beach. In Florida, the average annual revenue is $44,000 with a 58% occupancy rate, an average daily rate of $205. And there's currently just over 4,000 listings in the market. And one of the advantages here is a strong, consistent demand, solid income, and an entry point that's more affordable than most coastal markets. And then there's Nashville in Tennessee is generating annual incomes around $40,000 with a 59% occupancy rate, an average daily rate of $190 to $200. And with a median purchase price of under $500,000, investors can expect some pretty solid returns in this market. I mean, what makes Nashville compelling is the robust year-round demand which supports strong occupancy and healthy cash flow, whether you're a first-time investor or experienced in this market. And then Scott Scottsdale, Arizona is where higher-end investors potentially see some great returns. I mean, average annual revenue is $82,000 with a 57% occupancy rate, but the standout here is the average daily rate of nearly $400. And the median purchase price sits around $800,000, reflecting the premium nature of this market. This desert market offers high ADR, a large inventory, and above average revenue potential, making it an attractive option for investors seeking premium returns despite the higher cost of entry. And then there's Asheville in North Carolina, where one of my favorite markets for newer investors. The average annual revenue's just under $45,000 with a 55% occupancy rate and just under $300 average daily rate. And with a median purchase price of under $500,000, you can definitely again expect some good returns. However, and in this market, there is limit of inventory, suggesting less competition and also potential for good market appreciation. To give you concrete examples, we helped a client purchase a property at 76 Climbing Astor Way in Asheville, North Carolina, and it was just over $700,000. The closing was back in March 24, but in the first year of operation, it showed really strong performance aligned with our market data. On the coast, our agents facilitated the purchase of a place in Jacksonville Beach in Florida for just over $500,000. Again, the closing happened in October 24, and they're also already coming up for being in the property just about a year. And the property performed incredibly well over that time. And the initial projected revenue was $100,000 with a setup budget of $10,000 for 10 guest properties. And these numbers that they're already generating are just the starting point. What sets our team apart more than just connecting buyers to hot markets is our network is made up of active short-term rental owners and local experts. That means for you is an insider guidance, real-world income comparisons, support with regulations and local connections for management all the way through to design. We deliver detailed custom analysis that goes far beyond online calculators. Think AirDNA, but combined with boots on the ground knowledge for each community. But one of the most valuable aspects of our approach is that we don't stop at the purchase. Our support covers everything from staging, from identifying the right properties, understanding rules and regulations, navigating permits, securing financing, and obviously doing the shopping, and then finally closing and recommending improvements to help you. And one of the most valuable aspects of our approach is that we don't stop at the purchase. Our support covers every stage, from identifying the right properties, understanding the rules and regulations, navigating permits and licenses, securing financing, and obviously closing, and recommending improvements, as well as how to scale your property portfolio over time. Let's face it, most real estate agents can help you buy a property, but how many can help you navigate specific zoning requirements and income predictions on a property, whether that's in Sonoma County, in Asheville, or Jacksonville, or in Florida? I mean, how many understand the seasonal booking patterns that can make or break revenue projections? And then how many agents have trusted relationships with local property managers who specialize in vacation rentals? I mean, the best part is that there are no extra fees for this value that we add. We're paid by sellers at closing, so you get the deep expertise and national reach without the added costs. So if you are aiming for high appreciation and strong returns and are looking outside of Sonoma County, consider Scottsdale, Sedona, Nashville, and Utah. These markets have shown consistent growth in property values along with strong rental performance, giving you the best of both worlds. But if you're looking for an affordable, accessible entry point into short-term rental investing, then look in places like Indianapolis in Indiana and Branson in Missouri, as well as Hocking Hills in Ohio, that offer solid opportunities for first-time investors. And one of the best things about these markets is that you can get started with a lower initial investment while still generating meaningful cash flow. And if you're drawn to coastal, to mountain, or urban escapes, our national network lets you discover, purchase, and operate vacation rentals across these top-performing regions. And honestly, having this geographic diversity means you can build a portfolio that's balanced across seasonal patterns and customer demographics. And here's something that many people overlook when they're starting out. Different markets attract different types of guests, and knowing this can make a big difference in your revenue. Beach properties often draw families during the summer, with slower periods during the shoulder seasons, while mountain properties shine in winter sports seasons and fall foliage periods. Whereas urban properties usually see more consistent year-round demand, though they can face much greater competition. Now, all-in-one approach covers everything from site selection to tax strategies, supported by an unmatched network of vendors, as well as managers and lenders. And one of the things that sets us apart is those relationships we've built in each market, which can save you months of research and trial and error. So think about what usually happens when you buy an investment property in a new market, particularly a market you have zero familiarity with. You're trying to figure out who handles property manager, or who can help with permits, or who's reliable for renovations, and who really understands local booking patterns. Well, we've done all that legwork, not just in Sonoma County, but in many of these other markets. For example, in Jacksonville Beach, we know which property management companies have the best connections with cleaning services, which contractors understand the unique requirements for vacation rental properties, and exactly which permit processes you need to navigate before generating revenue. In Asheville, we understand seasonal patterns that affect everything from booking rates to maintenance schedules, and we know which neighborhoods are seeing the most development and how that could impact your property values over time. And the best part is that we're paid by sellers at closing, so you get access to the deep expertise and national reach with no extra buyer fees. That means you can tap into our network and knowledge without cutting into your returns. So the data is clear. Well-chosen short-term rentals deliver strong income, strong appreciation, tax advantages no matter the market cycle. With 100% bonus depreciation back for investors, first-year revenues can get a significant boost. And the STR market has matured since the early days of Airbnb. And with solid data, proven strategies, and best practices, much of the guesswork is gone. Whether your goal is to replace income, build long-term wealth, or create a geographically and seasonally diversified portfolio, the fundamentals have never been stronger. If you're ready for a personalized market match, a custom analysis of your preferred destination, or to connect with a local expert in any top vacation market in the US, we're here to help you grow your STR portfolio beyond Sonoma County. Reach out for us today at david@BruingtonHargreaves.com, and let's talk about your investment goals, your risk tolerance, and which markets might be the best fit for you if you have sort of some personal preferences. And don't go just yet. Make sure to check out my next video linked right here. In it, I break down the real truth about living in Sonoma County in 2025. So if you think about moving to the area, you'll want to watch this to get to know what to expect. So thanks for watching. Until the next video, go well.